Welcome to the Recon Trader. In today's video, I will share with you the top 5 TradingView indicators that I utilize when I am day trading. So let's jump right over to TradingView and the charts. And in doing so, I ended up over here on a 5-minute Bitcoin chart where I was recently scalping, and thus I utilized my Recon Scalper indicator that I created specifically for this strategy. But before we get too far into the weeds on this particular indicator, we actually need to start with the most basic indicators that all traders, especially F&Gs, need to be aware of. So I will go into more details on this indicator a little later in the video. So let's get into the weeds of basically the top 4 indicators all traders need to be aware of. And so I will start on the BTC USDT perpetual contract chart over on Bybit. These are 15-minute candles. And so now I'll ask all of you out there, can you spot the first indicator on the chart? It's the price. Price is the #1 indicator. It is a leading indicator versus a lagging indicator. Most indicators are lagging indicators. Price action is a leading indicator. And in this case, I could actually trade this chart without anything else on it. I could trade this chart strictly based on what you see here in front of you, and that is price. And a perfect example would be right now, Bitcoin's price is heading up into an area of resistance. And so you can see resistance up in this area. If you look back a little further, we have more resistance here, some resistance back at this level, previous support, which again can turn into resistance. Bitcoin could be setting up for essentially a double top, and then another dump back down here to maybe perhaps a double bottom. And that would be one way to trade this indicator known as price, is basically looking at support and resistance levels. Breaches or rejections from those levels could be tradable opportunities. Now I can typically just eyeball these levels with a quick look at the chart. For instance, where you see the price moving sideways back in this area, a breach down below this support, which also was support around this area. And when I say a breach, I mean an actual close of the candle, not these wicks. But once we get this close of a candle down below this level, probably a good opportunity to get short. Now you could wait again for the price to come back up into this level, which is now flipped from support into resistance, and once it rejects from that level, perhaps you could get short. Again, trading price as the only indicator can be done. I see so many people that have Ichimoku clouds, bat patterns, all this crap on their screens, and they can't make a decision because there's just way too much information. Now, for newer traders, if these support and resistance levels don't just pop out at you, then I have created a support and resistance indicator. And again, you can see this red line right here is showing possible resistance right here and right here. So as Bitcoin's price moves up into the zone, I would look for a possible rejection. Or if we get the breach, really, I wouldn't feel comfortable getting long again, because here is the next level of resistance. I would really want to see Bitcoin's price close above this level before I felt comfortable going long. However, I might look at getting short at this level if we see a rejection. But again, these resistance or support levels, we see support back here. When Bitcoin's price comes back down into that area over here and starts to move up, that could be an indication of an opportunity to get long. So again, I could trade Bitcoin based purely on price action. However, another indicator that I do use, it's not one of my top indicators by any means, but it's my Recon Pivot High Low, and I use that sometimes to see the trend, because again, the trend does matter. And in this case, you can see lower high, lower high, lower high, along with lower lows. So during this move, if you're short, you can feel comfortable that you're getting lower highs and lower lows, and the likelihood of this trend continuing is actually in your favor. And again, these pivot points by no means are in the top 5. They're just something that's on my screen. Sometimes it helps me just to glance and see perhaps a trend of these lower highs or lower lows. Clearly this is trending down. On the flip side, you can see these higher lows and some higher highs, so this is where the price is moving up. Now, with that being said, I do have a wide variety of different indicators that I have created that I use, but the majority of them are private, and I've just started releasing some of these indicators to my Recon Trader YouTube channel members. So if you want access to some of these private indicators, you can see the little lock. They're private. You can't search for them in TradingView and add them. You would actually need a link that I do provide to my YouTube channel members in order to add these to your charts. And so if you wanted access to these indicators, you would need to be a YouTube channel member. So you would actually have to join my YouTube channel. Now, another way you could trade this price action is based on a trend line. And so if we drew a trend line out, like say here, and you see a break above, that could be an opportunity to get long, or again, a retest of that trend line and a move away could be an opportunity to get long. And so trend lines aren't necessarily indicators. However, I have created an indicator called trend lines breached. And as you can see right here, that green line coming down is pretty much in the same spot that trend line actually breached through. Here's a bearish breach where we see the price break down through this trend line. It retests and eventually it rolls over and sells off. So another indicator that I created. However, I don't use this indicator a whole lot in my day trading. I use it a lot more as an automated bot setup where TradingView sends alerts to like Crypto Hopper, and it will execute buy or sell orders based on these breaches. So far, out of the top 5 indicators, I've shown you 2, the scalper and obviously price. Now, the next most important indicator is also probably the most overlooked indicator, and that's going to be volume. So if I add volume back to the chart, you can see down here at the bottom of the chart is the volume. A lot of times where you see price action like this moving sideways, you will see flat volume. And once you see a tick up in the volume, a lot of times you'll see the price move up or down. Again, over here we get fairly flat price action moving sideways. And then once we get this big bar here, we get a tick up in volume and we see a big sell-off. And so rising or falling volume can be an indication of a trend reversal or trend continuation. Now, an indicator I also created for volume is called Recon Volume Spike. You can see the candles that are in yellow would be where we see a spike in volume. Like I mentioned back here, price moves sideways. We get a dump on this candle here. We get a rise in volume. And then we see a trend reversal. We get another yellow candle, spike in volume down here with a big wick at the top. A lot of times these spikes in volume will indicate trend reversals or the end of a trend. And so my objective for this indicator is just to send me an alert that there was a spike in volume. For example, this candle back here, see this huge wick to the top side. This would tell me that the sellers beat back the buyers and we're probably looking at a reversal. Same thing on this one here with this giant wick to the top, volume spike, we eventually get a reversal. Right now on Bitcoin's price over here, if we continue to see this big wick up and the fact we're here at a level of resistance, I would look for a reversal back down. Double top being set up perhaps, we'll have to wait and see. So now you know the 2 most important indicators, and that's price and probably volume, which is the most overlooked indicator is volume. The 4th indicator that is commonly used by day traders, and the reason you should use it is because so many people use it, is RSI. And the RSI indicator basically measures momentum. And I have created my own version of the RSI to include a couple key levels that I keep an eye on and also bullish and bearish divergences. That's what I'm actually interested in. Down here at the bottom of the screen, you can see 3 bullish divergences set up in a row. To me, that would definitely signal the possibility of a bullish reversal as the price of Bitcoin has become oversold. But I would not jump in based on these bullish reversals. I actually want to see the RSI get above this yellow line which is at the 50 level on the RSI. And in my experience, if the RSI gets above the 50 level after bullish divergences, there is typically a pump towards the top side. And you can see on this particular candle, indeed, the RSI is now above 50. And if you had gotten long on the close of this candle and perhaps had your profit target back up here at resistance, you would have captured a nice little profit. Now on the flip side, I don't typically get short unless the RSI is below this 50 level or the yellow line. And so if we look right here at this candle where the price of Bitcoin starts to sell off, we can see that it does close below the 50 level. You could have had an opportunity to get short here and perhaps capture a nice little bit of profit and had your target maybe back here at this prior level of support. So now we have price, volume, RSI. Number 4 is going to be VWAP and an EMA or a moving average. And so I created the Recon VWAP and moving average indicator basically to combine both VWAP and a moving average. And the moving average I use is an EMA moving average. And so both VWAP and moving average are considered trend-based indicators, and I actually use them in conjunction with RSI, since RSI is a momentum based indicator. You technically shouldn't trade based on one type of indicator. You should use a momentum indicator along with a trend based indicator, and ideally your third should be perhaps a volatility based indicator like volume. And so if I turn back on the Recon volume spike indicator, I now have 3 different type of indicators on the screen. And in this case, for example, on this short, I would get short not on the first red candle, but perhaps on this red candle, which is now yellow. Once it breaks down through both the EMA and the VWAP and closes, to me that would be an opportunity to get short, along with the fact that I have a spike in volume, which is volatility, along with the RSI momentum, which is now broken down below the 50 level. And so I have the momentum going in my direction along with the trend and the volatility. Now you could wait for the price action to come back into the moving average and VWAP and reject from that level and then get short, along with rejecting along the RSI level down here, which you can see it rejects along the RSI 50 level, the yellow line, and then we get another spike in volume, and eventually it all sells off. And then the price starts to roll back up, and I know a lot of traders who won't get long as price is below the VWAP, and so once you get this break above VWAP, again your RSI is above the 50, you could go ahead and get long, or you could wait for this retest. But either way, getting long once we got above VWAP could have been a profitable trade. Again, maybe taking profit up along this prior resistance. Now, another way to use VWAP or a moving average is for support or resistance. In this case back here, you can see the price of Bitcoin sells off right into VWAP, bounces from VWAP, and perhaps once the price gets above the moving average, the yellow line, you could have gotten long. And as long as it stayed above the moving average, the yellow line, you could keep your position open and not actually get out until perhaps you get the breakdown of the support. And so in this case, your VWAP and a moving average can be used not only to identify trend, but also be an indicator of support levels or levels of resistance. All right, so with that all being said, we now have our number 1 indicator, which is price. Number 2 would be volume. Number 3 would probably be RSI, only because so many people use RSI. And then number 4 would be VWAP and a moving average. Again, VWAP is by far one of the top indicators all your major traders use, and they all look for the same thing. So if you're looking at the same thing everyone else is, there is a good possibility that you're going to get the same moves that everybody else is looking for out of VWAP. And so that is probably the top 4 indicators all traders need to be aware of. And then the 5th indicator that I use most frequently is probably because I do day trading and I do a lot of scalping, is going to be my Recon Scalper indicator, which we saw earlier in the video. But one thing I didn't mention was I don't use this indicator solely by itself. I use it typically along with that VWAP moving average indicator. And so the vertical lines I actually dropped in here just to show you the breaches of the actual moving average on the scalper indicator. They're not a part of my indicator, but I did want to make it easy for you to see where these crosses occur. And so for example, when we get the cross down below on the indicator here, what I'm looking for is where is price in relation to VWAP? It's below it. And did it cross below the EMA? If it did, that would be a go for a short. And so if I got short at that level here, I would probably put my stop loss just above the VWAP, because a break of VWAP would probably be a reversal in trend. And so if that's at 0.35%, I'd want at least a 1 to 2 risk versus reward. So I'd be looking at 0.7% return, and I would get that on this wick down right here. And with a little bit of leverage like 10x, that would be a 7% profit on that simple move. Now on the flip side, we get a green cross above the moving average on the Recon Scalper indicator. However, where is price in relation to the actual moving average and VWAP? It's below both. So that's a trade I would not take. And as you can see, the price actually moves down and eventually ends up selling off with another opportunity on the indicator to get short. We get the cross down below, and the price is below VWAP, and it is crossing down below the moving average. And so again, I would more than likely put my stop loss probably just above the previous price action level here where it broke down, and that's going to be around 0.4%. And so I would be looking for at least a 0.8%, if not a 1.2%. But if I look for that 0.8%, I would end up hitting my profit target somewhere in this area here. Or if I went for the 1.20, I actually would probably get it at the bottom of this candle here, without ever being at risk of being stopped out back up in this area here. And the fact that I get in the trade here on this indication eliminates all this chop that I could have got chopped up with, because I'm actually already in a trade. And if I'm in a trade here, I don't get involved in a new trade until I actually hit my profit target. And so all this chop here that a lot of people will be like, well, are you going to get chopped up? Actually, I'm already in a trade back here. This is nothing but noise to me. I'm looking for my profit back down on this candle or the bottom of this candle for the 1.2% profit, which again, with 10x leverage, would be around a 12% profit. And my risk was only that 0.4%. With 10x leverage, obviously that'd be 4% risk. And with a 1 to 2 or a 1 to 3 risk versus reward ratio, I only have to be right like 35% of the time, and I will be a profitable trader. Now, another example would be the opportunity to get long on this particular breach right here. After we took profit on this move down, we get a breach above on the scalper indicator. We also see the price does breach above the EMA. However, price is below VWAP, so that would be part of your rules. Do you go long if you're below VWAP? I will occasionally take a shot at that depending on how far away price is from VWAP. I would actually look at VWAP being resistance. So in this case, if I were to get long, the best I could do would be around 1%. And if I had my stop loss at the bottom of these candles, that'd be around 0.4%. So I could get a 1 to 2 risk versus reward ratio. So I'd probably go ahead and pull the trigger. And so if I had a 0.4 risk on, then my profit would be 0.8. And you can see we hit that up in this area on these candles here. Now the next trade for me would be a loser, because this looks like a perfect rejection at the VWAP. However, it immediately reverses and fakes out and closes above. And so this trade would be a loser. There is no magical indicator that's 100% right. And so in this case, you could then flip long because you do get the breach above on the scalper indicator, and you might be able to capture some profit on that trade, as you don't ever actually go back down to where your stop loss probably was, and you probably hit your profit somewhere up in here. However, I do want to point out this move here where we do see the bar on the indicator drop below the moving average. However, the price is not closing below my EMA and it's just above VWAP. So to me, I would look at VWAP being support, and it acts just like support like it should. And so that would be the fifth indicator that I use when day trading. It's actually probably in my top 3 along with obviously price and volume. So I think that's enough jaw-jacking for this video. It went way longer than I anticipated. You know what to do. If you're interested in these type of videos, you might want to shoot that subscribe button. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. If you're interested in gaining access to some of my personal private indicators, click that join button and become a Recon Trader YouTube channel member. And so with that all being said, in closing, remember, never send your money into battle without first doing your recon. See you in the next video.